obviously, people don't like to talk about death, especially their own death. In 14 years, I've probably talked to at least 10,000 people about their life insurance. And of course, that involves talking about them dying. So I've kind of been able to put together two different styles of people that approach looking at life insurance and approach eventually buying life insurance, and it's kind of in two categories. And out of that kind of sample size of 10,000 people, the first category I would call the straight liners, the from point A to point B as efficiently as possible, not necessarily as quickly as possible, but they know they have a need. Whether they just had a child, maybe they have a mortgage, they have a business, they have some need that they are at least aware of that they need life insurance to solve that problem. So they'll come to you, and maybe they don't know how much they need or what type of product or kind of the more bells and whistles of the policy itself, but they know they need it. And once the conversation starts, it's pretty efficient to get from point A being the initial discussion all the way to point B being applying for life insurance and putting it in force. Now, both styles have their pros and cons, and the pros of that first style is you're probably going to get it, right? You're determined, you have initiative, you want to get it because whatever the cause is or the problem is for you to get it is more important than you to not get it. So if you just had a newborn, it's more important to get the insurance than to not for the sake of your new child. If you just taken on perhaps a big mortgage, you want to cover the debt if something happens to you. You don't want to leave that debt for your spouse to have to deal with. So whatever the need is, it's obviously more important to you to get the life insurance in place. So they're okay talking about themselves dying to a certain extent, but they're going to move fairly quickly to get the insurance. Now, the other approach is what I'll call the roller coaster, and that is you meet them for the first time, and it's very educational, right? You're teaching them all the things that life insurance can do for them, and not just term insurance, of course, talking about whole life insurance as well. So, the explanation of the fact that there's a savings account, it grows without an annual tax bill, it always goes up every year, never goes down. Like just how whole life insurance works is going to be foreign to someone who's really never heard about it. It's not natural to know how whole life policy works. It is a fairly detailed type of investment to make. So through that education, they get excited. There's interest. They see the benefits and they kind of peak at all right. I'm sold on this. This makes sense. I want to do this, and then it kind of branches off two ways. And one is kind of back to category A where they straight line it to the finish line. They get it. The second and very common approach is for some, all of a sudden there's a delay. Something comes up, whether it's the business with the family, they took a trip, and things get delayed, and kind of the excitement kind of rolls off, and it kind of comes down to a bit of a halt, and that's fine. I mean, not everybody has to like meet a few times and all of a sudden get the insurance, but I see this pattern of excitement, and then it kind of dips off, and then this is really the turning point for a lot of people, and again, there's kind of two categories once they get down to this kind of bottom lull there. And one, the people come back. Maybe it takes 6 months, 12 months, maybe a bit longer, but they do come back, and maybe there really was a valid reason why they couldn't do the insurance. Of course, sometimes there's valid reasons, sometimes it's more of an excuse, but they do come back, they do get it. The other side of that is people kind of disappear. They don't end up getting it. You talk to them years down the road, turns out they still haven't gotten or they never end up doing it. And that delay is it's pretty bad because if the need is there, if there's a true need there, especially if there's like young kids or debts or business needs, and you delay 2, 3, 4, 5 years or longer, you're now much older. It's going to be more expensive. You're running the risk of having health issues along the way. So maybe something out of your control happened to your health, and that's going to jeopardize your chances of getting life insurance in the first place. So maybe you do want to get it, but it's 5 years down the road. You can't get it because you had a heart attack or cancer or diabetes, or maybe it's going to cost more, not only because you're older, but because of some health issues as well. So whatever, I guess, category you fall in, I guess it's okay to fall in either, but my suggestion would be to make sure you're always making some level of progress. Whether it's incremental progress, that's fine. Just keep kind of pushing forward throughout the process to eventually get it. Because, I mean, if you die and you don't get it, it's not going to be anything on you. It's going to be on your family. And I mean, they're going to be the ones who suffer. It's you're not suffering, you're already dead. They're going to be suffering, and they're already suffering enough by losing you, and now you're causing them to financially suffer because you took too long to get it. And whatever your reasons were, there's a thousand different reasons I've heard, but it doesn't matter. You didn't get it. So again, I've talked to easily 10,000 people about their life insurance needs, and there always seems to be those two different type of people. Both have their pros and cons, but at the end of the day, the person who gets it is better off. So it doesn't really matter which category you're in. Just don't take forever, because it's going to be extremely frustrating if something happens and you can't get the life insurance you need. Thanks for watching.